All right. Just testing out this stream again. It's been a long time since I did a stream on TradingView here. So, just trying it out, and when better to test it out into the lead up to the FOMC interest rates decision, right? So, if you are joining me, just put it into the chat. Let me know that you're here. Let me know if you have any questions as we get through this. I will intend this to be a quick short and sharp session as I'm just testing it out. And then I'm going to head into my own trading after doing some quick analysis with you guys here. So you can see here that the Fed funds rate expected to go from a 3.25 to a 4% today. It's not so much about that 75 basis point rate increase that we're looking towards, right? It's already anticipated that we're going to see a 75 basis points rate hike. The question is whether the Fed Reserve is going to comment about further rate increases, right? Terminal rates right now at that 5% level. If it does get to 4% tonight, there's Singapore here, so tonight, then, or this morning, then we have another 1% to go, which is likely to be a 50% increase in December, a 25% in January, and then another 25% into the year. So that's the plan. Is the Fed Reserve going to stick to the plan? If they do deviate from the plan in a more dovish tone, then we're going to see significant weakness into the dollar index. We're going to see the upside in the S&P because of a dovish Fed. But I think if they stick to the plan, 75 basis points increase tonight, 50 and talk about a 50 basis points, rather pretty much confirm a 50 basis point increase in December, then we're going to see possibly some strength come back into the dollar index. All right. The markets have been a little bit different, have been a little bit weird in the lead up to the to this event. We've got about 15 minutes to the start of the event. Why I say it's been a little bit weird is that you can see here, just a quick summary, the euro dollar has been dropping against the US dollar. The euro has been dropping against the US dollar. So in the lead up to the event, right, normally it's in a consolidation. We've seen the dollar strengthen. With this hour, we've seen it bounce back up a little bit. Pound dollar as well is strengthened, bounced back up a little bit. But the US yen has been sitting right across. So despite the dollar strengthening a little bit through the day, the Aussie dollar and the Kiwi dollar as well losing ground against the US dollar, the US yen has been sitting right across. So to me, that looks a little bit curious. We've seen the US CAD as well sit, bounce back up with some dollar strength and sit right across right now. So everything's retracing a little bit before the start of the news. Just wanted to, because this is going to be a short and sharp session, just want to let you know as well. I actually just did a session here earlier today. So I did this at 5:30 this afternoon in Singapore. I did this for the IC markets live analysis session. So I went through in a lot more detail. This was a 1 hour session, a lot more detail about how the Federal Reserve interest rate decision was going to affect each and every currency. Okay, so I went through the whole list of currencies and then went through the possibilities of, what happens if we see a hawkish Fed, what happens if we see a dovish Fed. So I'm going to try and summarize everything within 15 minutes. Let's look at the release at 2 o'clock, and then I'll start trading from there, and I'll leave you guys with your trades. Okay, so looking here at TradingView, I think that if you are joining me on TradingView right now, you would already be a follower of mine. If you're joining me on YouTube, then head on to TradingView, search for me, Jindal_Thai, and give me a like and a follow. I do post up a lot of trading psychology, educational material about how to use indicators, what to think about before a news event. I do a bit of analysis, well, quite a lot of analysis about the markets through the week. And recently, a lot of the Bank of Japan interest rates decisions, divergence against other central banks, ECBs. I get you prepared for your trading through the day, through the week, right? So do me the big favor. If you are on YouTube, click that like button, click that subscribe button, jump onto TradingView, follow me on TradingView. I'm sure you get a lot of value out of it. And hey, it doesn't cost you anything as well. All right. So looking at the news here, this is the dollar index on the H4 time frame. Right now at that 111.36 level, I have indicated here the key, well, the immediate resistance level and the immediate support level. If we do see the dollar index, like we said, if you see a hawkish Fed, they talk about a 75 basis point rate increase this time. They talk about further rate increases into the future, until they crush inflation back down to their target level, then we might actually see some upside, right? I would be looking, if we see a hawkish Federal Reserve, the key level is at 111.77. I'll look for that to break. We could see price climb. I don't think it'll go all the way to 113.94 or 114. I think we could see a level here at about 112.52, which is about that previous swing level there. Alternatively, if we do see, a dovish Fed, looks like market is pricing that in a little bit. If we see a dovish Fed, we're going to see this track lower. The key level here is 110.72. If it breaks below 110.72, then we're going to see that downside move towards that 109.50 level. All right. So key levels here, 111.77 and 110.72. Break either, we're going to see that significant move on the dollar index. So I don't think I have time to go through all the ones that the pairs I want to go through. I'll highlight the few that I think has the biggest potential. First of which will be the Aussie dollar. No, not the Aussie dollar, Kiwi dollar. All right, the Kiwi dollar. If we do see a stronger dollar, a stronger US dollar, you can see here the Kiwi dollar has been climbing very strongly, right, very consistently to a good trend line towards the upside. You see that move there. Okay, so I like that it's tested very recently. It's tested that 0.59 resistance level. Right now, looks like it's climbing back up a little bit, but what we could be looking for here is a rejection of that 0.59. So look for that to test up and to turn back down. I'll be looking for selling opportunities from that point, either, let's say, even from here, right? You'll be looking at about a 40 to 50 pip stop loss. You'll be looking at a 40, 60 pip take profit, a 1:1 or 1:1.4 risk reward ratio towards the downside. You could also put a stop order a little bit higher up. So if it does turn up and reject back down, about 30 pip stop loss, about 90 pip take profit level, a 1:3 towards the downside there on the Kiwi dollar if we see a stronger dollar index, right? A stronger dollar index leading to a reversal on the Kiwi dollar. Following on from that, I would say that if we see a weaker dollar, right? If we see a weaker dollar index, a weaker US dollar, then look at the US yen right now. It looks primed, perfectly primed at that 104, 147 level, key level at 147. If it breaks below this point, immediate trade towards the downside. So let's say about 146.80, very tight stop loss, 40 pips, a quick take profit at about 90 or 1:2 risk reward ratio towards the downside there on the US yen if we do see further dollar weakness. And it's not all. If it breaks below that 145.90 level, then we're going to see significant downside, right? If I drag this right across, you can see that 145.90 key level there. If it breaks below that point, closes below that point, hey, we might even see the US yen come down to test that 143.90 level. You might have a second trade towards the downside here. Again, tight stop loss, about 50 pips. Take profit in this case, a good 160 pips towards the downside. Again, another 1:3 risk reward ratio on the US yen. So break this up into two trades to the downside. Look for it to break the 147 and then the 145.90 if we do see a weaker dollar index. Let's say that we see a stronger dollar index in this case, right? If we see a stronger dollar index, a hawkish Federal Reserve, could it bounce from that 147? Very much so. We could see the US yen bounce up. Be a little bit more careful there. I would say 147.36. Take profit at 124 pips. Stop loss tight. Stop loss at about 40 pips, 50 pips. A 1:2 risk reward ratio back up towards that 149 key resistance level on the US yen. All right, so we've got the Kiwi dollar towards the downside. If we see a stronger dollar index, we've got the US yen either to the upside or downside with a stronger or weaker dollar index. One more thing to look at, or just a couple more things to look at, the US CAD. I was actually really keen on the US CAD before, a little bit less so now. It seems to be reacting not very nicely, so I'll skip that. Towards the downside on the US Swiss franc, reversing back down could happen if we see a weaker dollar. But I think that the main thing would be back to the euro dollar. You can see it's been trapped between that 0.9950 and 0.9859 or 0.9860 price levels. If we see a stronger dollar index, a hawkish Fed driving the strength to the US dollar, then I'll be looking for selling opportunities on the euro dollar. Look for it to break below 9860. Stop, so about 9840. Stop loss about 30 pips. Take profit 80 to 90, almost a 1:3 risk reward ratio towards the downside there on the euro dollar, back towards that 0.95 or 0.9750 price level. All right, so a couple of good news scenarios, a couple of bad news scenarios. I'll tell you one thing I wouldn't be doing, I wouldn't be trading on this pair will be the pound dollar. I'm not looking to trade the pound dollar in this news event because bear in mind, tomorrow, back to the Forex Factory here, tomorrow we do have the Bank of England interest rates decision. They are looking to take rates from a 2.25% to a 3%. So another 75 basis point rate hike from the Bank of England tomorrow at 8 p.m. GMT plus 8. So watch that out. Pay attention to that. That could wreak some havoc on the pound dollar. So I'm not looking at that. I'll focus on the Kiwi dollar. I'll focus on the US yen either to the upside or downside, and the euro dollar. Right, that should keep us busy enough through this trading session. Right, should keep us busy enough through this trading session, and I think it'd be possibly quite a nice, fruitful, and interesting session as we go along. All right, so now 5 minutes to the news release. What I will be doing today together with you is I will be looking at the rates decision. We will look through the rate statement together. Okay, FOMC likely to lift rates 75 basis points, looking for clues on December moves, exactly as we spoke about. Fed expected to raise rates by 75 basis points, signal on hike path. We are waiting for that and watching very closely. So I will be reading the statement together with you guys. And then, unfortunately, because it is in the dead of the night right here, 2:30 a.m. press conference, I won't be doing a session together with you. I will be actually still trading that news event. So, by 2 o'clock, we'll go through the news, we'll go through the details, and then I hope you trade well, trade safe. Remember, one of the things I'm sharing with you guys here is that if you are trading any news events, make sure you size down your trades, trade half that trade size. Right? Whatever you normally do, halve it. Do it even now. Do it right now, even before you get into the news trading mode. Be ready for a no action. Be ready for no action. Right? Just because you're ready to trade, just because it's 2 a.m. here in the morning, it doesn't mean that the market is always going to let you enter a trade. Respect your stop loss and take profits when you trade news. Non-negotiable, ever. Okay, always have a fixed stop loss, have a fixed take profit, get into a trade, apply that straight away, keep it there. Either you close out before the stop or before the take, or it's going to hit and close you out. All right, and like what we have just been doing 15 minutes before the news event, plan. We pre-identify opportunities in a good, bad, and even a mixed news scenarios. We look for what we're looking to trade: the Kiwi dollar, the Euro dollar, and the US yen. We don't have to look at every pair. Now we've nailed it down to 3 to pay attention to in this high volatility event, keeping it simple, keeping it consistent, and most likely profitable. Remember, if you fail to plan, you plan to fail. So let's come back to the news event. We are 2 minutes away. First number I'm looking for right here will be that 4%, right? So first number I'll be looking for here will be the 4%, and then after that we'll go into the statement, which will be released, it should be released here. So we'll read the statement briefly. I'll share with you my thoughts and views. If there's any surprises, I don't think there'll be much surprises in either the Fed funds rate or the statement. Then it'll come to the press conference at 2:30. All right, so you get a bit of a 30-minute breather, and then the volatility comes back again at 2:30, goes on for about an hour and a half at the most, so about 3:30 or 4 o'clock. All right. I just noticed that the Japanese banks are on a holiday. Might be quite interesting there for the yen, since they're not there to defend it too much. Okay, so a minute away. We are getting there. If you are enjoying this live trading session, please remember, click that like button, click that subscribe button, jump onto TradingView, search for my profile, and give me a quick follow. All right, thank you so much. So, a minute to the news event. Just do a quick refresh. You can see here that prices were shooting up, right now coming back down, retracing back down as we see markets poised for some dollar strength, possibly some dollar strength to come back in. And it's 2 o'clock. We haven't seen any big shoots. We can see the dollar weakness being applied right now. Our yen is being a possibly good trade there, so it's retracing back down. Right, if you had that order there, it would have triggered. You'll be sitting there waiting for that. So let's look at where we might see any surprises at the statement. All right, so let's look at the statement. See, this is how we'll pay attention to the statement. We look at that. Just a very quick view of that. Seeks to keep it at 2%. Raise rates by this. Anticipates that ongoing increases will be appropriate to get it to that 2%. In determining the pace, the Fed will take into account cumulative monetary policy with lags. All right. So it doesn't say anything about slowing it down, but they are going to be data dependent. Implications of the oncoming information of the economic outlook are prepared to adjust the stance as appropriate if risk appears in my impediment. Okay. All right, so no big surprises, but I think one of the things that the markets might be picking up on is to adjust this line, to adjust the stance of the monetary policy as appropriate if risk emerge. All right, if we did a quick comparison to the previous one, you can see that they also did say the same thing. So if you compare both the previous and the current statements, I don't think we're going to see much difference in terms of the two statements. Okay, and because of that, you can see the dollar being a lot dovish. Look at the dollar index here, spiking down, hasn't broken. It's looking like it's going to break that 110.70 level. So we're looking at the dovish. Why so? Is because hasn't changed anything. And coming back to the statement again, taking into account the lags which will affect this, continue reducing, that one we know already. So I think it's these two lines. So taking into account that, so it's that line, and also adjusting the stance of the policy as appropriate. Okay, so we see the dollar index turning down. What I would say is that if we did that, or if we did jump into the US yen, it has broken. This would be that trade, that order that you would have. 146.80 went down almost towards the take profit. If you were in a trade, I would close out now. It doesn't have to hit take profit. Close it out. Let's see what happens. If it breaks below 145.90, then I'll be looking for another selling opportunity towards the downside. You would see that the Kiwi dollar breaks above that 0.59 level. I don't think it's going to turn back down. So if you had that order, I would take that away, right? So I think that it's breaking towards upside. Doesn't look like it's going to turn back down. Euro dollar as well. Where did my euro dollar line go? Okay, euro dollar as well, bouncing back up. Take that away. Still trapped within the range. I'll be looking for it to break above 9945. I think the main fireworks, the main event here will be the US yen right now trading at 146.19. Key level here because of what happened here on the 27th of October. If it does break below this point, then we're going to see that downside push. All right. Next key level 143.90. Let's look out for that, especially if price breaks. So I hope that by walking through this news event together with you, you've learned quite a bit how to prepare for a news event on the different scenarios, good news scenario, stronger dollar index, bad news scenario, weaker dollar index, what to pay attention to. I hope this has been interesting and it's been exciting for you. What I'll do now is I will end the session because I want to jump onto my MT4 and start trading. So if you have any questions, please feel free to leave a comment. Reach out to me, let me know. I'll be happy to guide you through your trading journey. If not, trade well, trade safe, and take care now. Bye bye.